This is Chris looking at the upcoming July 28th trading week, and in front of you is the dollar CAD. As you can see, it's done a couple interesting things here over the last couple weeks. We bounced off of this uptrend line, and this is an uptrend line that actually starts back in September of 2012. It's hard to believe we've been in an uptrend for a couple years, considering that we are so much lower than we were, 5-6 years ago. It's hard to believe we've actually bounced this significantly. You can see that this trend line has been tested several times, has held true, and has done it again, even after this significant fall. This is nice because this gives us from here about a 600 pip range to possibly go higher. That being the case, we should see this market continue upward, and the fact that we broke over 108 during the session on Friday and broke the top of the shooting star was more than enough to get me to go long. I think we go to 110. In the short term, ultimately, I don't see why we don't test the highs. Further adding credence to that chart is the EuroCAD weekly. You can see we have a nice uptrend line, and we formed a beautiful hammer right at the 145 level. We did break below this at one point, but closed back above. I think a break at the top of this hammer sends us looking for 155. The euro's in trouble, but it appears that perhaps the Canadian dollar is in more trouble than the euro. Certainly by this chart, I would expect that. The pound dollar, as you can see, fell during the course of the week. Kind of surprised me, to be honest with you, a little bit, because the 1.70 level should be very supportive. I think down to about 169 or so, we will continue to see support as I switch to daily. You can see there is some clustering down here, so that's it's not just a number I'm pulling out of out of a hat here, so to speak. It's 169. I think needs to be broken to the downside in order for this to be negative. And now that you're on the daily chart, you can certainly make an argument for an uptrend line that's probably going to coincide with about 169. Friday was a little bit of a hammer, not much of a hammer, but same idea. So that being said, I still like the pound. It's just perhaps it needs to take a little bit of a breather. I mean, it's been pretty parabolic for a while. Breaking above 170 was significant. Pulling back, finding buyers, and then perhaps going to 175 is what I still think this pair does. And then finally, the euro, as you can see, is certainly in trouble, and I don't know that that's going to change this week. We have, without a doubt, a broken support level at the 135 handle, and with that, I think that we probably continue down to the next red line on my chart, 133. Short-term traders will probably continue to dominate this market. Maybe looking at 4-hour charts or something like that. See, here's a 4-hour chart that looks like it's ready to bounce. Maybe selling it off about 134.5 again. I don't think there's going to be enough room to move on the daily, and certainly not on the weekly at this point. If we get back above 135.50, then I think we re-enter this area up here. Keep in mind, though, this Friday is non-farm payroll, and that, of course, has a very interesting connotation to the market and what it can do. Dollar CAD really is probably where we're going to see the most movement. So if we get decent employment numbers out of the U.S., it'll probably continue to go higher just for yet another reason. Watch the oil markets. The oil markets look a little susceptible at the moment. And that, of course, works against the Canadian dollar as well. And that is what I'm paying attention to this week.